Hi farms, welcome again to your Forex Best Entry channel. Recently, I conducted a poll in the Telegram group to know what asset we should backtest as we start the backtesting series of synthetic indices. And guess what? Volatility 10 had about 57% of that poll. So in today's video, work with me as we see what Volatility 10 has been doing in a while. Remember our checklist. First of all, want to find out what is the structure of the market, the overall trend of the market. What has the market been doing all along? Want to put a history behind price action. Number two, we are going to be checking for our higher time frame point of interest or the institutional candle, which most of the times, as I said, will create a fair value gap, an imbalance or an IPA, depending on the term you want to use for it. And number three, want to find out our liquidity sweep, which will lead to a break of structure. Now, if you are new to this channel and you haven't watched the video where I explain market structure and how we can use this checklist, I will leave the link to the description, the link of these videos to the description, both the first and second edition of in this video page. Now, this is the second edition of the market structure series. This is the first edition. Go check it out. They are a bomb. You will see a lot of amazing things. They are how to trade the market step-by-step approach. The link will be in the description page of this video. Go watch it out. And please leave a comment or drop your questions in the comment section. Usually within 2 hours, you get a reply from me personally. All right, today, as you can see, we're looking at backtesting series. This is the first edition, and we're starting with synthetic indices, volatility 10. We want to find out what the market has been doing, what price has been doing all along. I don't want to waste your time. Let's head straight to volatility 10. As you can see on my screen, this is volatility 10. I want to pitch my screen together so that you can see clearly. We want to find out, according to our series, according to our checklist rather, we want to find out what is the overall trend. So as you can see from here, this market has been trading down in this regard. Okay, so market came back. This should be too big. Okay, this is too big. Let me reduce it to, okay, something like this. Then market came back again, gave us this high, and then started coming down again. So if you say if you can see from my screen, you know that this market has been bearish all along. It created a high and gave us a lower low. Came here, gave us a lower high, gave us a lower low, because this low closed below this. So maybe I should just type that. Okay, let me type that so that it will be, all right, this was a high. I call it a higher high. Okay, let me call it a higher high. I'm going to, I should make this red. Like that, like this color. Okay, something like this. This was a higher high. All right, let me pitch my screen out so that you can see. This is how to trade. You want to find out what is the trend of the market. This is too small. Let me keep 20. Yeah, all right, something like this. Then market came, gave us a lower low. A lower low. Price came, gave us a lower high. It's a lower high, no longer a higher high. A lower high. Okay, give us a lower low. Let me remove this. Give us a lower low, and then price came, gave us a lower low. This is where to start from. You want to identify what is the structure of the market. Give us a lower low. Why is it a lower low? You will agree with me that this is a low, but it's lower than this, and this is higher. This is lower high because this high is higher than this low. So this is a high, in respect to this lower low here, but it's a lower high because this is higher. All right, market came, gave us another lower high. And then price came, gave us a lower low. Okay, I'll take this as my lower low. Price came. This is to tell you that this market is bearish. It's bearish. Say more sellers are in the market. So when price goes up, the sellers pushes price down. Price came, gave us a lower low. We consider the body or the candle. The body, if you check the body, okay, it closed above. It closed above, gave us a double top here, came into this. So this was the last lower high. So this was the last lower high. This is the next lower high because this body obviously is price didn't close. You see now, it didn't close above this. So this was the last lower high. This is the last lower low. All right. This is how to just check trend. You want to find out what is the trend. You must be able to, first of all, establish what the trend of the market is. That's the first thing to do. Establish what the trend of the market is. Price came, gave us another low. Price came, gave us a lower low in this place. Now watch, what did price do? Price gave us, okay, let me click this. This is a lower low, yeah. This is a lower, so a lower high. Price can give us this lower high, broke this place. Here, price gave us a lower low. There's it. Price gave us a lower low. Then what did market do? Price came, gave us a break around this place and broke this structure. So if we were to look for trade, would have been looking for a reversal from this place, and then we go long. So price broke this lower low, giving us, this becomes a higher high. I don't want to, let me go and duplicate this. Let me clone this. Give us a higher high. Price give us a higher high, so let me remove that. But price is supposed to come back into this whole move down. This entire move down. Price is supposed to come back into this entire move down that led to the break of structure. This was supposed to be our point of interest. If this was valid as a higher high, price was supposed to come back into this place. If you check, price didn't come back. Rather, it created tons of liquidity around this region, and off we went. Price created tons of liquidity around this region and gave us another lower low. So this was just price trading into an imbalance around this place, gave us that move down. So this was now a lower high, okay? This was still a higher high, but price came into an imbalance within that region. But if you check in between this place, you're still going to find the movement of price. A low, give us a high, give us a low, give us a high, give us a low, a high, like that. And then price give us this. So I think I will be correct if I remove this here, if I remove that. So I'll put this one as my higher high. I'm removing this because this is the last high. It was a one swing from here, it gave us this high, broke this structure. We're expecting price to come here, price blew through. So let's continue. Price came all the way to this place. And what were we expecting? We're expecting price to continue coming down. It's a long history. It's a long history. So let's go on. Price came here and started changing course. This was a higher high. Okay, this was a higher high. because it closed above the wick, the body closed above. So you want to be able to identify what price is doing. Check the body close above. If I open it, the body close above this wick. So this was a higher high. And then let me leave the back now. Let's continue from here. We have been able to establish that this market has been going down and has been trading within this side. So let's look at the current history. We have a high here. We have market giving us this lower low. This lower low. Market gave us this high, gave us this low. The next time market came and gave us a lower high. This is how to put history behind price. We want to find out what price has been doing to help us know what the market is going to do. I think it's clear now. Yes, this kind of balance on the screen. So price came, gave us another, sorry, lower high. I'm writing lower low rather. That's all right, lower low. Price gave us a lower low, sorry, not lower high. Price gave us a lower low. All right, so what did price do? This was a lower high. Now the last was this, a lower high that was given to us, and price gave us a lower low, which is this. So from here, you will see that the market has been bearish. Price has been coming in this order. Price has been coming in this order. You agree with me that this market has been bearish. So now we want to find out, we know price has given us a lower low. So hopefully price should give us a lower high where price is currently, and then we should head for a lower low. Possibly we head for something like this. So price should give us something like this, give us that distribution that we look for, and then we come to give us this, something like this. Price should give us something like this. Okay, let me remove that. So I want to find out, since we've been able to establish number one, that the structure is bearish, the next thing to do is to find out where is our point of interest. What's the higher time frame point of interest? Where is that institutional candle that captured liquidity and gave us the break of structure? Now, this is where you need to watch the market structure series, and don't also forget, once you go there, ensure you subscribe and turn on the bell icon so that once I post new videos, you'll be first to be notified, because we are just starting the backtesting series, and there we're going to be able to get some trade set up, which I will also drop in the Telegram group. If you are not in the Telegram group, the link will be in the video description. Ensure you join the Telegram group, because sometimes when we see trade setup, we just put a screenshot there and then we discuss the trade in the Telegram group. It's very important to join. So let's analyze from here. We'll see we'll have a lower high. We're expecting a lower low. So now I want to find out what is happening around this region. You will find out that price came to this place and gave us, there was some movement of price around this place. All of a sudden, price moved upward and pushed out all the early sellers that were trying to sell this market down. So this place becomes our point of interest, because this is the place that's captured all this were liquidity. Liquidity were resting around this region. Price came and took them out. So we want to find out where is the candle that captured them. This is that bullish candle that captured them. So let me capture the wick of the bullish candle, and then I capture the end. The bullish candle ends here. I want to put a mark on the bullish candle. That was the candle that captured liquidity. I want to zoom it out so that you can see this was the candle. This was the candle that captured liquidity. That's the candle that captured liquidity. Cleared all these early sellers around this place and then gave us a break of structure. Where is the break of structure? Price came and closed below these lows. So price came, cleared everybody here, moved down, cleared all the buyers that were here. People were buying from here up. Price cleared those that were selling and cleared these ones. So this was liquidity here, and this was a break of structure down from this bullish structure down. Now, I'm going to go to a lower time frame, let's say the 4 hours. We want to find out what price is doing. How do we catch price from here to take price down? Because that's the next plan we should be thinking. How do we catch price and take price downwards? Because one, we've established that the market is bearish, the structure, the overall trend. And then number two, we've been able to find out where is this is the higher time frame point of interest. This is the point of interest, the institutional candle that captured this liquidity and led to a break of structure. That is the point of interest. So I can remove this now. Let me go to H4. I'm on the 1 hour. Okay. All right. Let me go to H4 and see. Let's go to H4. Let's see what price has been doing. All right. It's very clear in this place. Very, very clear. Very, very clear. Price cleared all these people here, all of them. Price cleared all of them. It was that break. So let's zoom out on the candle. Let me show you something. I want to zoom out so that you can see. As I explained in the market structure video, I said this is the candle you're going to find. This candle is going to leave an imbalance somewhere, 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 because of the rapid move. That rapid move downwards to break structure, it came and cleared liquidity and moved downward, breaking this low, broke this low, broke this low. So there will be an imbalance somewhere that it will leave. And you can see that already. If you have eyes, you can spot the imbalance within that place. Yes, that is the imbalance that price left. That's the imbalance price left around that region. Yes. Okay. Oh. We see that this week and this week aren't touching each other. So that's imbalance around this region, telling you that this point of interest is going to hold because price moved out quickly and there were a lot of volume that was popped into the market around that place. So this place is going to hold. Now I want to find out, we see tons of internal liquidity around this place, tons of internal liquidity around this place that have been cleared already. Yes, tons of internal liquidity that have been cleared. Let me put this on. Yes, this was internal liquidity. Was captured. This was internal liquidity cleared. So price is already at our potential area of interest. So let me write that. This was our potential area of interest. Okay, interest or potential area of distribution. Yeah, this would have been, these are potential area of redistribution. Right, okay. Yes, these are potential area of redistribution. So coming to this area, now you want to find out, you want to wait for a break of structure within this zone. This is our zone, our potential area of distribution. Let me go to the 8 hours. You want to wait for price to give you the evidence. What do I mean by evidence? A smaller time frame break of structure. It's going to look like something like this. like this, like this, like this, and then to break structure, come back, retest, and then we go down. It's going to look like this. It will give you, first of all, a high. Sellers will jump in. Then it will come and clear all the sellers that jumped in. To clear all of them. To clear all the sellers that moved in. It's something like this we want to see around this region. And once it clears the sellers, it's coming to break structure. It will break structure downwards, breaking the last structural point. Then it will come back to either the institutional candle or the imbalance. It's something like this we are anticipating would happen around this place. This is what we call our lower time frame entry. Now let me remove this. I wouldn't need that now. Let me remove this so that I'll go to lower time frame and see what price is doing at this region. So let me mark this region. Let me just mark this region like this. Region like this. So let me go to my 15 minutes and see what price has been doing within this region. Because price has come to that place, then let's see what price has been doing within this region. I'm on smaller time frame right now. What has price been doing around this region? Remember, this was the last high. This is what price has done. Price has come and cleared this as liquidity. Price has cleared these early sellers that were here. They have been cleared. Are you getting it now? So this is my lower time frame, 15 minutes. Price has cleared those early sellers. And you can see price has been within this place. Now, the next structural point I'm expecting price to come and break is this. This is the next structural point that price should come and give us the break. If price breaks down this place, then we should be looking for a retest around this region. So price can give us some, if price can give us something like this, breaks here, then price should come back into that zone, and then we look to sell from there. So this is how to spot your entries. How to spot your entries. You want to wait for that clear of liquidity sweep, and then you want to find out or wait for price to break the last structural point. The body will close below this, and then we have this move down. So we cannot tell what price we do. We want to wait for price to do it first. So price we need to break here first before we consider it as a structural point and a break of structure. And then we can now look to play this point. So this is my bias for VIX10. You've seen how we backtested it from beginning, and then we kept going. A lot of people wanted to sell from it, but this was a double top, clearly stating that this is liquidity. Price came, broke this place. Some people entered here to buy. Price came, cleared them. But what did price come to do at this point? There was an imbalance here. There was an imbalance here that price came to fill. There was an imbalance here that price came to fill. If you check here, this was the imbalance. Price came into the imbalance and then gave us the entry. Though I wasn't on chart, if I was on chart, I would have been able to play this. This was just so clean. Watch what price did. As price was coming, price started giving us a lower high, Sorry, I like this one in color. It's the same thing, just structure. You wouldn't want to a lower low. As price was coming to the imbalance, this is what price did. It was a lower low. And price came, this had to backtest. Gave us this lower high. Gave us this lower low. And what did price do? Price closed above this place. So this was, This was a higher high. This was a higher high. If you check, the body closed above. So when the body closed above, price needed to come back inside. There was a cube in this place. If you go to lower time frame 5 minutes, you see there was a cube in this place, or you will find an imbalance within that place. Price came into this region. There was a cube in this place, and then price started giving us a higher high. Okay, price was this high. Price was this lower, lower. Price was this lower high. Okay, sorry, price was this higher low. Higher low. Okay, and then price kept moving in that direction. So if you wanted to play, you'd have been able to get a play here. If you were on your chart, you concentrated and focused on each way, you'd have been able to get this play. You just get your entry around this place. I got your entry, this place. The stop loss would be on this place. Stop loss is on this lower low, and then you keep taking price upward, upward, upward. I've taken price to this ton of liquidity that was here. That I've given you a one toward. So close a little bit. This will be your entry, stop loss at this level, at this low, and then price to this place. That will give you a 1 to 4 already. So this is how to trade. You want to find out the structural points and wait for price to get into that place. It's as simple as that. I will employ you to please subscribe to this channel. We're going to be back testing other assets and looking for what price is going to do so that we can get an entry. If you have not turned on the bell notification icon, kindly do that so that once we make another video, you can be among the first to be notified. Thank you so much. Peace out.